Hi candidate, welcome to another session of manifested online classes. So in this session, I want us to continue with the topic number 6, which is about public sector accounting standards, or basically international public accounting standards. So in our first class, we defined what are public sector entities. We also defined what is public sector accounting. And also we looked on something to do with IPSAS, International Public Accounting Standards, which we said are standards which are formulated or basically developed by a body known as IPSAS-B, and basically they are applied by public sector entities when they are preparing their financial statements. So in this session, I want us we look on the first IPSAS, which is IPSAS 1, and IPSAS 1 governs the presentation of financial statements by the public sector entities. Remember, first of all, we say that the public sector entities are those particular entities which are accountable to the members of the public, or in other terms, they provide essential services to the members of the public, including the county government, including the central government, including the parastatals, and also the charitable organizations. Now, these particular entities at the end of the year, they are expected or they are required to prepare financial statements by IPSAS 1, and a complete set of those particular financial statements, as we are going to see, comprises of a number of components, actually 6 components. We are going to look on them, and equally from there we proceed and look on the 2 main components. But before we do that, we can say that this particular standard here, that is IPSAS 1, we can say IPSAS 1, International Public Sector Accounting Standard number 1, prescribes the manner in which general purpose financial statements are presented presented by public sector entities, So mean that IPSAS 1 here basically prescribes, or in other terms, we can say it provides some rules and principles to be applied by the public sector entities, specifically when preparing now the general purpose financial statement. General purpose financial statement are financial statements prepared by these particular entities and to be used by various stakeholders. Now, equally, this particular standards, or we can say a complete set of financial statements comprises of the following components. Number 1, we have a statement of financial performance. This is equivalent to the statement of profit or loss for trading entities. Number 2, we have a statement of financial position. Number 3, we have a statement of cash flows. Number 4, we have a statement of changes in equity, also known as a statement of changes in net assets. Number 5, we have a statement of comparison of budget and actual information. Budget and actual information. And finally, number 6 here, we have the notes. We have notes to financial statements. So therefore, according to IPSAS 1, when a public sector entity is preparing financial statements, those financial statements should comprise of 6 components. We have the statement of financial performance, a statement of financial position, statement of cash flow, statement of changes in equity, a statement showing a comparison of the budget and actual information, and also now we have the note. Equally, this standard here, that is IPSAS 1, has gone further to prescribe or basically to outline some of the items which must be highlighted or which must be included in the notes. So therefore, maybe you can say that this or maybe you can just talk over the items to be included in the notes, to be included in the notes. In the notes include the following. So number 1, we have accounting policies, followed by that entity, or in other terms, you can just talk of accounting policies used by the public sector entity in terms of preparing its financial statement. These include things like the method of depreciating assets and so on. Number two, we have the key assumptions, which equally were used in preparation of financial statements, And major, when we talk about the assumptions here, we are talking of the accounting concept, like the going concern, the accrual concept, and so on. So the other item which is also included in this particular notes is a description of the entity's operation, operations. The other content, or basically the other item which will be included in this particular note is what we refer as the domicile. And the legal form of the entity. The domicile. Domicile, basically here we are talking of the country of operation, and the legal form. The legal form refers to whether the public sector entity is a county government, is it a parastatal, is it an arm of the central government, and so on. And also the other item to be included in this note is a reference to relevant registration. So when talk about relevance, that is reference to relevant registration, maybe you're talking of the registration, or basically the Act of Parliament, which governs the operation of such what a public sector entity. Because basically what we know is that most of the public sector entities like county government, parastatals, and so on, their operations is governed by a certain Act of Parliament or a certain registration. If it's something like CASNEB, the operation of CASNEB is governed by something called the Accountant Act. So in the notes, CASNEB, when preparing its financial statement, it can give a reference to that the operations are governed by what? The Accountants Act. So therefore, these are basically some of the items which must be highlighted in the notes which accompany this particular financial statement. So basically what I've said is that as far as this particular standard here is concerned, that is IPSAS 1, we are going to look on how to prepare 2 main components of financial statements. And that is the first one here, which is the statement of financial performance, and the statement of that is the statement of financial position. So let's start by looking on the first one, which is the statement of financial performance. Statement of financial performance, and I've said that it is equivalent to income statement, is equivalent to the statement of profit or loss, and this one is prepared to ascertain the performance of a public sector entity. So we can say that it is prepared to ascertain the performance of public sector entity. And therefore this one will be prepared to compare the total revenues of a public sector entity with what? With the total expenditures. Any difference between these two, any difference between the total revenue and the total expenditures is a surplus or a deficit, simply because this, or basically the difference is not a profit or loss, simply because these particular public sector entities do not operate with an objective or with a motive of making a profit. Their objective, their motive is to provide essential services which are required by who? The members of the public. So how do we or how is this statement of financial position prepared in accordance with IPSAS 1? So let's look on the format. The format of the statement of financial performance. Statement of financial performance. So always we start with the revenue, because I've said we prepare this to compare the revenues and what the expenditures. And here we just need to have a single column, just a single column. We take into account various incomes by public sector entities. This may include, number one, what we refer as the transfer from exchequer. Transfer from exchequer, this is the amount of money allocated to a certain public sector entity, like a government department, like a government ministry, from the exchequer, or basically from the consolidated fund. We also have transfer from other ministries. So these are any amount of money received by a certain ministry, a certain government ministry, from other ministries as a result of services rendered. So we also have fees, fines, and licenses. So this is basically the amount of money collected by a public sector entity from the services it rendered. And then maybe we also have things like other revenue, and so on. Other revenue, etc. So, and then what we do here, we get the total revenue. Total revenue. So from there we proceed and we record the expenditures. So the expenditures, this may include things like salaries and wages. Equally, we record it in that column. This will also include things like supplies and consumables which were used. This may also include things like the transfer to other ministries, and maybe things like the finance cost, the cost incurred as a result of raising finance cost. So, and then what we do, we get the total expenditures. Which now we can abbreviate this to be A here, and this to be B. So once we have the total revenue and the total expenditures, we just compare the two. We take this minus this, and the difference will be a surplus or what? Deficit. So the difference will be a surplus, if a positive, but if a negative, that will be a deficit for the year. So for the year, a positive is a surplus, a negative is what? Is a deficit. So therefore, according to IPSAS 1, that's how the public sector entity should present the statement of financial position, statement of financial performance. So let's move and look on the preparation of the second component, number 2, and that is a statement of financial position. So this one is prepared to ascertain the financial position of a public sector entity as at the end of the year. In other terms, this is a statement of asset, liabilities, and equity. So, but first of all, we can say that this is prepared to do what? To ascertain the financial position of a public sector entity as at the year end, or as at the end of the year, as at the end of the year, So, and therefore this one will be prepared to show the asset, the liabilities, the equity of a public sector entity. Now, the format which is used in terms of preparing this is a little bit different from the format which is used by private owned entities, because here we record assets, we less liabilities, we get the net asset, which is the difference between asset and liabilities, and then we record items of what? Of equity. So we can look on the format here. Let's look on the format of the statement of financial position. Equally, in this case, we just need to have a single column. We always start by recording assets. And as per this standard, always a public sector entity should start with the current asset, not the non-current, but the current assets. Current asset will include inventories. These will include receivables. This may also include cash and cash equivalents. So therefore, it is important to note that here, unlike when preparing a statement of financial position under IAS 1, International Accounting Standard number 1, here we start with the current assets, because under IAS 1 we start with the non-current what? Asset. So then from there get the total, and then proceed, you record non-current assets. So the non-current assets, these may include things like the PPE, property, plant and equipment, and any other etc. But mostly this is the common one. And then from there we get the total assets. Maybe we can abbreviate that as A. Yes. So then from there we proceed, or basically then we record liabilities. And equally here we start with the current liabilities. Current liabilities, this will include payables. This may also include accruals, etc., and any other. We get the total current liabilities, and then from there we proceed and record liabilities, that is non-current liabilities. Non-current liabilities, which are basically the long-term liabilities. So in this case, you may be given something like a long-term borrowing, and maybe things like liability for long-term employees benefits. employees benefits, yes, and then now from there we get the total liabilities. Total liabilities and these total liabilities, this one we can just refer to that as B. You can refer to that as B. So after getting now the total liabilities, we get now the difference between asset and liabilities. Yes, so we get something called the net asset. So the net asset is the difference between asset and liabilities. Net asset, which will be equal to A, which is now total asset, minus B, the total liabilities. And basically we double insert because that is the end of the first part of our statement of financial position. And then finally we record equity, and basically this equity comprises of accumulated fund. Accumulated fund is the capital of these public sector entities, and we also to this we add accumulated surpluses. These are like accumulated profits, but in this case we talk of accumulated surpluses, and then to this now we add any other reserves, and then we equally get the total here, which is total equity, and basically the other name for total or for equity is what? Is net assets. And basically now whatever you get here as the total equity or total net asset must be the same with the figure now which you get what there. So therefore that is a format which is used in terms of preparing or in terms of presenting a statement of financial position, which I've said is quite different from the format which is used at the IAS 1, International Accounting Standard number 1. So that is basically what you need to know as far as the IPSAS 1 is concerned. So I want us, once we come back in our next session, we look on an illustration question regarding the preparation of those two components.